Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Collaboration on technology, space exploration and artificial intelligence.
Nasdaq ended about 1.5% higher. Yields were down about 9 basis points, 4.53%. 60 points higher on the Nifty is what you have on the Nifty. So 23,100.
Now, obviously, there is a quick emerging market movement going on.
When Mr. Arora talks, everybody just listens.
Yeah,
we got them separately offline.
Yes, exactly.
We have moved up into a select group of nations which are offered the latest and the best technology.
Thank God it's Friday, right? But at least today will mark the end of the selling pressure.
Manufacturers don't like too much of fall. I mean, below 2.5% would be deflation for them.
And Vivek, I think the only silver lining is the Nifty is valiantly trying to hold on to the 22,800 mark.
Okay, well, that's the day so far. It's not very much of a day to report on because it's been down and out. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Surubi here, and Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, good afternoon. I think Nigel was very excited about Valentine's Day in the morning. The market said, okay, sure, red. It's all red, only for Nigel.
Your last right in the morning, where is the red? You got it. How much more red you want? You got on the Nifty bag. You got on the Midcap, the small cap index. So it's been a painful day, so to say it. But, you know, at least in the last 20 minutes or so, there is some kind of stability. I think bulk of that margin call for the day, I think that's done because it normally gets done by midday. So I think by 12:31, I think bulk of that is gone. So let's see whether or not this 22,750, 22,800 can get defended.
You know, just one more stat that for the last 1 year, if you've been invested in the last 1 year, if you were invested in a Nifty fund, now you're up only 2.5%. And if you were looking at the Midcap index, then the entire last year's gain is at the threat of being wiped out because Midcap index is barely up 2% in the last 1 year. Let's see if this stops here or not. But yes, it's been painful to say the least.
But, you know, Surbi, I don't think you should lose heart because the previous couple of years were very, very good. You know, so
yes,
if you average it, out, it's okay. You know, I know everyone's saying that if they're looking at their books the last 1 year, everyone's mutual funds are down, you know. But if you look at it a longer, take a 3 or 3.5, 4 year time horizon, right? It's still up. So,
since we're doing Hindi in the morning, dil behlane ke liye kya bolte hain? Khayal acha hai.
Galib, ye khayal acha hai. Yes, very good. Very good.
Nigel, the problem is that everyone, especially individual investors, right? They all mark to market every day.
Yeah.
They will look at their portfolio and they will say, you know, and when you see that come off, you're absolutely right. That should not be the way, but it's just human nature.
Indeed.
You know, you try to do that, and of course that's not looking very good. But I just want to put out 2 or 3 points. So the thing is, broader markets. So by the way, for the Nifty, it's the 8th consecutive down day. That is, you know, rarely happens. 8 days in a row, the market keeps getting beaten up like this. Doesn't happen very often. It's been a vertical kind of a decline, and again, typically after a vertical kind of a decline, unless there is some issue, fundamental issue at the a crisis, a global event or anything of that sort, that's when markets fall. But there's none of that right now. And we've had this vertical 8-day straight fall. So let's see if there is a bit of a turn as well. Now, Nifty, of course, at the day's low, hit January lows. So which is the 27th of January low, 22,008. We're actually there. 870, 876 was the January low. So we're at the January lows. It's not kind of gone much below that right now. But the mid and small cap indices, and this is actually the interesting part. The mid cap index closed on the 4th of June 2024 at 49,150. We are right now at about 49,200. What is 4th of June 2024? The day of the election results. If you remember, that was a big day when Nifty was down 1,800 points. And then, of course, we closed slightly off the lows. And next day, there was that sort of, the BJP was not, the NDA did not get as many seats, so it was not a clean sweep, and they had needed alliance partners. It was that panic low. And I'm not taking the low because we're not there yet, but the close is what I'm looking at. And for the small cap index, the close on the 4th of June was 15,692, and we are around 15,300 or so at this point. And that's essentially, that ties in with what Surabhi was saying, which is about, if you came in late, in 2024, as you can see, the index itself is down. So stocks, of course, are lower in many cases, much lower than those levels. And of course, I would say even if you came in second half of 23 onwards, depends on what you bought. Then you are kind of not doing very well at a portfolio level. We're not talking about eating into the gains at a broad level. Now you're starting to hurt in an absolute sense right now. Guys.
Well, indeed, the small cap index is down 3% if you look at the 1-year returns now. But by the way, this 22,800 mark, which was an important support for our markets, we've gone twice below it, and both times we've tried to rebound. This time, the rebound seems to be a little stronger because it's trying to make its way now towards 22,900. So we're going to watch whether it holds, at least on a closing basis, 22,900. Still down 150 points, but the extent of fall in individual stocks, Natco, 30% gone this week itself. KFIN, 25% lower. You have that on your screen, the kind of losses that we've seen in this week itself. Acme Solar, 23% gone. Piramal, Himadri Chemicals, Aircon. And I've just picked a few, and these stocks are all down close to 17-18%. And from their 52-week highs, they're down about 40-50%. Even in the large cap space, and Eicher Motors, 12% lower for the week. BEL, Hero MotoCorp, 10% gone. Imagine on these large cap stocks.
Absolutely. And, the mid-cap, the good news is that the mid-cap index was down over 3%, almost 3.3% at one point in time. From there is a slight recovery. So let's see if the last hour can at least stem this incessant selling pressure that we've seen so far this week. Just some names to illustrate the kind of cuts that we've seen in there across the board. Let's pull up that list of stocks. Swiggy, Deepak Nitrite, Loris, Natco, Bajaj Hindustan. It's cutting across sectoral lines. It really doesn't matter. A lot of pharma stocks have fallen today. So that's something that stands out as a trend. KFIN, Kalpatru, Manappuram Finance. Some of these, came out with numbers as well. So there's a compounded double whammy of weak numbers and a weak market. That's what's playing out. A few green spots, and we've looked really hard to find some green. Stocks that are managing to stem, work against this, big downtide. Chalet Hotels, Ethos's numbers also came just a while back. There are Sapphire Foods, some hint of these consumer stocks where there's a little bit of a green, 0.5%, 1%, 2% thereabouts. Ethos is doing better now after numbers, 3% up. Ajanta Pharma is a name, but very, very few stocks which are managing to blink green today. Otherwise, it's been a tough day and a tough week. Nigel?
Well, that's right. Just to give you a statistic, since it's February 14th, I looked at the last 10 years or so. It was even Stevens. Actually, the number of days we ended high was 5:4, and with today, it will be 5:5. Just one more statistic, since we were talking about this 8-session losing streak. The last time the Nifty was down for close to around 8 straight sessions. Well, the following week, we did see a gain of close to around 2.5%. Just stats, but in February 2023, the Nifty ended with a cut of close to around 3.5-4%. That's 2 years ago. And the following week, we did bounce back. So giving the bulls some kind of heart on that front. But the structure is clearly weak. And that's the problem right now. Mitesh Thakkar joins us to help us out with his trade. Well, Mitesh, that 22,750, 22,800. Yet again, the Nifty has gone out there and it's bounced off that mark. The problem is now sentiment is really dampened and the structure has got broken as well. What's your trade on the index? So I think in the last 20 sessions, we have gone there thrice and we have bounced out there. Your trade, Mitesh?
I think, one, there's good concentration at that strike. Also, now, price that the declining swings have taken support and bounced back from there. At least gives us some good base. Now, the important part is that whether we'll, hold on to this base, do some consolidation and then try to look at higher levels, or we bounce back and again come back. Maybe next time test it, because while we have heard of a triple bottom formation in technicals, we don't have a 4 bottom formation. So, I hope that this time really we do get some sideways consolidation, which is slightly less volatile than what we have seen in the last few days, and then possibly look at a sign of reversal. Till then, the good thing is that we have a reference level, which means that anytime you're close to 22,800, cut your shorts. Now the next shorting opportunity either will be on a bounce back or if we break 22,780, 750 zone. Having said that, on the stock side, I have one buy and one sell. Ashok Leyland is something, which has a good chart structure. In the last 2-3 days, has given a pullback after the big breakout. So buy here with a stop at about 210 and look for a target of around 225. Eventually 235 is what I'm looking at. And IGL is on the sell side. That's a sell call with a stop just above levels of 190.5 for targets of 177.
Okay. That was an interesting one, Mitesh. Huh? We so far in technical analysis, we know double bottoms, triple bottoms, whereas there's a quadruple bottom of sorts that is getting formed around 22,800. The bulls will definitely hope for that. Thanks very much, Mitesh. We'll come back to you for some more trading ideas in a bit. But let's try and understand really what has happened with the mid-cap market. This sort of a fall, 10% down in a week, 8 to 10% small cap and mid-cap indices. Amisha Vora is with us. She's, of course, chairperson and managing director at PL Capital. Amisha, we wanted to understand first and foremost how much of this is due to some sort of margin funding issues or unwinding of leveraged positions. Is there a lot of leverage still left in the mid-cap market? What's going on?
So margin funding was a large book, no doubt about it. It has been unwinding because of the price as well as the position getting reduced.
Yes, go on.
And what actually is happening is there is no panic selling because of margin selling, because the systems were very well managed. I think this panic is not only due to the margin selling which is happening, or there is any M2M losses which brokers are selling. This is also done outside of the system also. There is a good amount of actual selling which is happening, willing selling, because I can see what's happening in my book.
That's an interesting point that you raise. So we can't blame it on technical factors that, people are not able to cuff up margins, so therefore brokers are selling stock in the market. It's not that. This is well thought out, organized selling. I mean, it's a well-informed sell decision and that's being taken. So, Amisha, next question would be then, which is the class of investors? Because the institutional guys, especially the mutual fund guys, have been telling us that they've been buying in the market, and we see that in the flows. So what is the feedback you're getting from family offices, HNIs, ultra HNIs? I mean, what has happened this week in the mid-cap market?
Very surprising, if you ask me. Quite a large family offices that I speak to, they've been saying that they are at 10-15% cash level, but they are not in a hurry to deploy that cash. And of course, they're not ready to look at any new idea. Whenever they want, they will, consider from the existing stocks, whichever is good. So neither mutual funds are a net sellers, as the numbers also suggest, nor family offices are the ones who are really dumping the stocks. It's the large, on one end, you cannot say them retail, they are retail, HNI, ultra HNI. Everybody below family office, what you consider, I think they're selling. There are two things which happen. One is, the retail markets were so strong and the demand was so strong that anything and everything, including an MNC selling its stake and walking away, and the stock used to go up. So that has completely changed. And we see that there is now no new retail buying. That is causing, if you ask me, the biggest pressure on the markets, and valuations any which way in quite a lot of cases were very high. So they are also taking a beating. But one important thing, if you see...
Yeah, go on, Amisha.
One important thing, if you see from the perspective of how bearish the mood has turned, that if you ask me, the budget was really good. The consumption boost that they gave was very quick enough for the economy. RBI also coupled it up both with liquidity and a little rate cut. But the markets are not ready to pause. Incessant FI selling, continuous pressure on rupee has now taken its toll on the retail savings which were coming in the markets. And I think this week will really shaken the confidence of retail, which was continuously pouring in money Even if you see January numbers of mutual funds were excellent, but now will be crucial to see.
I must point out that the markets recovered quite a bit as we were talking. We were at about 210 or so. The market was about 22,780, and we've recovered about 130, 140 odd points since. So there is a bit of a bid which is emerging, and I dare say is today the last day that we see this kind of one-way drawdown. And I mean, not a big reversal, not a big recovery or anything, but at least large caps, typically what happens is large caps stop falling and then broader markets will stabilize. I mean, at least you stop falling first before anything else happens. At least in this phase, 8 days, kind of unnatural without any sort of specific event in that sense. I mean, so sometimes those things do work. 80 points down now. We were down almost 200, I think, when we started, or maybe right before we started this edition. 22,950 or so is where the Nifty is at. So, Amisha, what have you guys been doing? I mean, you make a round of phone calls, everyone is just watching. I mean, what else to do?
They say when a lion comes, what are you doing? And they say only lion will do something, you can't do much. So it's that moment when you really can't do much and you have to just hold on to your high conviction ideas and take the pain. And in case you have over-adventured in low quality, you have to really take the pain and cut it. These are the only two lasting solutions.
All right. Hi, Amisha. Good to hear you in. And in fact, you're saying that margin calls haven't really started getting triggered. It's just lack of participation, lack of sentiment as well. Before we let you go, give us a couple of top buy ideas from your end.
So currently when large cap itself is at such a receiving end, I think high quality, low vol is still the place to be in. And within that, I would think that Titan could be a very good pick at every lower this one. Their categories, their business will continue to be robust. So gradually one can continue to nibble at that, a complete domestic market play. And on a slightly differentiated way, I would think that I'm not somehow still a great fan of banks. So that is not the name which is coming, though my analysts are recommending it very aggressively and stocks are a bit outperforming. That's not still coming on the top. And I would rather say that I would still back a stock like Siemens or one of the defense names than going into anything else. But I think that ultimately growth, wherever the visibility of growth will be better, is the select stock pick that will work. Yes, these are the three names you picked up, and I think that these are the three names I would back.
And that top of that list is Titan. See, Amisha is also going with a Valentine's Day flavor. Demand will always be there. There are anniversaries, there are birthdays, there's Valentine's, there's Diwali. So demand will always be there.
What do you do when, as Amisha said, a share aaya to kya? Stay still,
you just stay still. You can't do anything. Jo karega, share karega, like she's saying.
I remember a friend friend's kid who was in Canada. He was told first week of orientation. He said, "Well, the grizzlies," and said, "What happens when you see a grizzly?" He said, "Well, you're in trouble because if you see the grizzly now, he probably saw you a week earlier." And he said,
that grizzly has been causing a lot of stress on the street. So for the sake of investors, hopefully that bear can leave the street alone for a bit. Amisha, thank you very much. Great having you on the show. And thanks for the perspective. Wish you a good, restful weekend and a good, happy Valentine's Day as well. Thanks for joining in.
Thank you so much.
Rima, time to move on to our next guest.
Time to move on. Prakash Diwan is now with us on the show. Prakash, are you getting the sense that we're close to the bottom? And is it time to go start looking for any ideas? There's the Deepak Nitrite, Kalpataru project. Natco's lost 30% this week. You're shaking your head for all these.
No. I mean, I was wondering where would you stop? Because the list is endless. But, good question. Where do you start getting to deploy money in some of these so-called good names? But look at the ones that have got beaten down badly, and we forget the ones that have reported poor earnings a week back or 15 days back. But then there's a smattering of companies where the numbers have been really weak and they've rightfully they've got punished as well, right? But look at on the other side, look at numbers which have been very promising, very strong, and things look very, I would say, promising from a environment perspective also. And I agree to one of the things that Amisha mentioned in an interview with you, that fundamentally nothing much is altered. You know, it is the sentiment where we are not finding enough people to have conviction to stand on the buying side. So when the selling is happening for whatever reason it's happening, and I think largely it is overvaluation. PE multiples have contracted from 130 to 95, but 95 is also exorbitantly. So what was very expensive has become expensive. But there's no interest in terms of buying because everybody is wanting to wait it out. So the buying will come only when you have a gradual uptick in some of these indices, some of these headline numbers, and that could take a couple of months. So my sense is it will probably be only facing this, waves of sell-offs and just try to look at and tide through that. Good businesses and completely not impacted for whatever reasons. We've got a good budget, RBI policy, great CPI data. I mean, inflation also is not worrisome, seemingly at least not worrisome. So I would believe you would have to start buying into those, companies that are doing well. And I know you're going to ask me which, like what, and I can tell you within mid-caps, there are a lot of names which have come into the IPO, through the IPO in the last 12, 18 months, and they are available at very decent valuation where the earnings keep improving.
So go on, Prakash, complete it. You already know our next question. So give us the name, 1, 2 to start with, whatever, 1, 2.
Yeah, so I mentioned, one of the names that I mentioned earlier was Protean e-governance. I still like the business. It's 40% off from its, maybe 50% now from its recent highs. But the earnings have been very promising. There's enough visibility of revenue going ahead. They don't get impacted with tariffs or with anything else. They are the backbone of the digital e-governance infrastructure, and that is only likely to become stronger. The second name is a small business called Indegene. Indegene does a lot of analytics, data analytics, and IT-related work to pharma. And where they contribute significantly is they help you, optimize a lot of the iterative, work that pharma companies do in terms of launches and their trials and all of that. And they tell you what probably is going to work, which is the direction in which you're going to work, what dosage, what solutions that you should look at, what kind of pipeline you need to build up. So that funneling has become very intelligent and backed with a lot of intelligence. I can call it AI and it will sound very fashionably positive, but it is intelligence at work for pharma companies. It's a unique business model. Doesn't have too many people doing it. And the company is doing exceedingly well. Of course, it's valued on a trailing basis at 60 times, but it used to be valued far higher. The earnings are catching up. So if you're willing to wait out, these are stocks which haven't seen too much of price damage as well. And you could kind of start nibbling into it at least. But you can't time the market for sure. I have no idea whether this is the bottom. March is going to be better. But from a absolute company-specific perspective, some of these names will start making sense.
Okay, Indegene issue price was about 452, so the stock is still holding above the IPO price, now at 572. But Prakash, thank you very much for joining in. We want to talk about pharma because that's borne the brunt of the selling pressure today. The pharma index is down 2.5%, and the fear is that President Trump's reciprocal tariffs will hurt pharma companies which export to the US. Vinny is here with some numbers.
Absolutely. So Nifty Pharma around a 2% fall is what we're seeing in today's trade. Last 5 days down almost 4.3%, and YTD it's down almost 11%. Now, what are these concerns coming in? Concerns around the US charging and putting on some tariffs on India is a major concern, and Indian pharma exports. Maybe that could see some impact coming in. If they do imply the tariff and put on a tariff on Indian pharma exports, that means it would become costlier for US consumers, and there could be more pricing issues that come in on the US front. Now, obviously, this is just a possibility that we could see these reciprocal tariffs coming in from President Donald Trump. As of now, there's no such announcement. What does reciprocal tariff actually mean? Reciprocal tariff is that equal tariffs by the US will be charged on the same products. If India is charging you 5% on a certain product tariff, US will charge the same amount of tariff for you. So it's like a tit for tat. If you are charging me 5%, I will charge you 5%. Now, currently, what is the status in terms of your India-US trade balance, especially for the pharmaceutical sector? India exports to the US in 2023 were valued at around $7.6 billion. Indian pharma imports to US were valued at around $600 million. Now, India charges currently around 10% tariff on pharma imports, while US, as of now, is not charging anything in terms of a charge or a tariff for these products that are being imported to the US. Now, when you're looking at it in terms of overall, what is Elara saying? That, as of now, it's not a major issue coming in. They're highlighting that on Feb 13th, the fact sheet, which was published by the White House, didn't point out anything for the pharmaceutical sector in terms of a reciprocal tariff as well. So not much of a worry there. They said that even if there's a charge coming in, it will not impact Indian pharma companies much. Not a major impact, because there are other multiple reasons that they believe there's a low chance of this coming in and not a major impact. So sell-off is not justified according to Elara. They believe that this is actually becoming a buying opportunity for the sector, and they find it attractive because earnings were not that bad. Valuations are looking attractive. So they would say this is not much of a worry, and a buying opportunity is what they are watching out for.
Thank you very much for now. At least for today, no buying has emerged. There seems to be a bit of a buyer strike. But for the market per se, Nifty is at 22,950. There's been a recovery of 170 points. And some of the stocks which have picked up in the last hour include a BPCL, and Adani Ports has trimmed its losses, still down 4%, but better than what it was. Hindalco is now back in the green, and some of the IT names too are trying to inch higher. Get into a break. On the other side, we'll get chatting with Sanjay Parekh of Soham Asset Managers.
Okay, 100 points lower, so that recovery is kind of stalled a little bit. We're still about 100 points plus off the lows, but it was looking like it would sort of, erase some of those losses in a meaningful way. But at the high point in the recovery, we were down only about 60 points. So from there, markets come off a little bit more. Sanjay Parekh is with us, founder and CIO at Soham Asset Managers. Sanjay, good to have you with us here. I guess the question is not what are you buying or anything. Well, we'll maybe get to that later. But what are you hearing, really, about the selling and what we're seeing in mid-caps and small caps? Just feedback from people that you've spoken to since the morning over the last 2 days. Quite severe selling.
Yes. So honestly, Prashant, at least, our clientele, family offices or large clients, there's no panic as such. We don't see that. In fact, most of the queries are incremental deployment. Should we do gradually, or and they also, of course, would want to see that they are nearing the bottom, and that's the view that they ask for. On the flows or the selling, honestly, Prashant, not much that I can add value. Maybe there are some excesses in some margin funding, maybe, but we are really not privy to it. But fundamentally, as Prashant had told last time, around 23,000, and market is always humbling, right? We thought that we really feel that in the larger caps, we are very near to the bottom. And we spelled it out in our notes saying that, 1,200 rupees of earnings looks reasonable next year. And then while the visibility is low on 26, 27, but if we take 1350 of earnings, and India on a historical basis has been at 20 times. If we get that at around 20 times, we can be at 27,000. And that would mean 15 to 16% return in 15 months, which is 12% annualized. So we did say that we think, and we strongly believe that Nifty, for the larger caps, we are very near to the bottom. In the interim, of course, flows can do its excesses on either side.
Hi, Sanjay, but what about the broader markets? The Nifty, the hope is that it consolidates somewhere around in this vicinity. How much more pain in the broader markets? That is the big concern, and that's the factor that's making a lot of investors very nervous. What do you think?
Yeah, I think it's back to fundamentals, and we were lucky in our positioning that today, earlier last month, we had reduced our small cap. Today, we are almost 76% large cap. If we take IndusInd Bank, which has now moved to mid cap, we are 80% into large cap. And we have 5% into 5% cash, and the rest is mid and small cap. So small cap in our portfolio also have reacted. It is bound to happen. But I think to answer you, it's back to basics. That wherever earnings growth are reasonable, price earnings are reasonable, or any other valuation parameter, it's reasonable. And you're not overpaying for growth. There's no froth, you're fine. In fact, we saw some of them actually doing better and they fell much less despite being small caps. But wherever, you have very frothy valuations, some of them at 15 to 17% growth rate, and they moved from 30 to 50 times because the return ratios are better. Now that 50 times have come back to 30, 35 times, whether it is cheap or no, I'm not very sure, So our portfolio as a whole is at 13.8 times price earning for 20% growth. Even if our growth is a little bit disappointing, let's say 18%, we are fine. So we would want to be hardcore GARP investors, and it's worked for us till now. And that is what I think is sensible investing, which we are trying to do.
Sanjay, hi, afternoon. But now that the sentiment is shaken to such an extent, when you see a 20%, 25% kind of fall in your portfolio, when you go out and tell people that go out and buy today, this stock is looking attractive, are they willing to commit money at this point? Because once you've burnt your fingers, you're going to think twice about instantly putting in. So that V-shaped recovery we used to see in the previous falls, do you think it's going to be absent this time, and getting in money back into the markets, barring the SIPs, is going to be a lot more protracted, which could hurt the way we move from here?
Yeah, so Nima, in the near term, maybe psychologically, because of anything in the last 6 months you added, by and large, it doesn't work, right? The market has been one way falling. So it does have a psychological impact, but ultimately an institutional investor has to be, a little bit thinking differently because they've seen cycles. And I'm sure, all of them, all the larger HNIs or fund managers, we would certainly look to start adding where there's mispricing. And the second thing which we see, and we get a lot of portfolios from our clients, their own portfolios. And we do see that there is very large scope for shuffling the portfolio because there is misallocation within a portfolio. And that's exactly what fund managers would do, that where they think that things have really got reasonable and which you couldn't add earlier because of the market was frothy, there will be realignment. But I don't see any panic, and I'll just take 2 minutes of what we did is we met few companies in the last 2 days. There are a few conferences, and I was just, of course, some of them are portfolio companies, but to gauge what's happening. So I just give you in brief, we met a cement company, certainly things are weak. Steel, yes, this duty, if protection comes, it's positive, but otherwise demand is weak. But there are a lot of positive pockets. So a largest module company, absolutely positive, very, very positive on growth. A capital good company, again, who is into the construction equipment space, leader in certain areas, again, quite positive on growth. A transmission company, absolutely bang on. So, so there are pockets of positives and there are pockets of negatives. As I said, cement is weak. An auto ancillary company also was quite sanguine. And that's why I think we may have one more quarter of weak growth. But also, we met the very large PSU bank chairman. And his view always, we respect, you all also get them on the channel. And his view was also that, it doesn't look to be a prolonged slowdown. It could be a slow recovery. So I think overall economy is slowly getting better, but it would not reflect maybe in the fourth quarter and start reflecting a little later.
Okay, Sanjay, got it. So basically you have to be a little patient. By the way, when Rima and you were discussing the V-shaped recovery, I was looking at we should pull up a one-year chart of the Midcap index. All of these Vs that have happened, where the Midcap recovery has happened, it's happened between 10 to 12 trading sessions. It's not taken more than 10 to 12 trading sessions. That's today's. Yeah, so all of these Vs have been covered up in, the max has been 10 to 12 trading sessions. Sometimes it's a matter of a couple of days. The dips have lasted only for 2 or 3 sessions or so. However, you see it, overall it's become a, upside down U, so to speak, within the Vs. So what happens now, because we're already down 8 sessions in a row, whether there'll be recovery by the time we do a 10th session or not, who's to say? But it's been difficult nonetheless. Sanjay, so just to go back and sum things up, what you're saying is that you need to obviously be patient. You are expecting a recovery in the fourth quarter. And from the looks of it, you would still add new money to the sectors that have worked, which is the economy-facing sectors, which would be sort of whether it's industrials or durables, or would you also look at some consumption baskets because of what the budget did?
Yeah, so one is on the mid-cap, and there the mid-cap index was always at a big premium, and it's still at a premium to Nifty. Nifty is at 19-20 times, and mid-cap is now at 28 times, we're going to 35 times. So the pocket of froth in a lot of mid-caps, not small caps, is there. And there maybe, earlier the flows were very high, and hence there's disproportionate buying in that, and the stocks were only 150. So that excesses would have happened is now getting corrected. So there I still feel there is a lot of froth in certain stocks. And on our view, I think, we still like financials selectively. Now there are a lot of names in Nifty, all larger caps, a renewable company that we added, HDFC Insurance we recently added, one large real estate play which we discussed last time, DLF we added, knowing that cycle can turn a bit, so we slowly added. And of course, in this fall, it is below our cost. But there are pockets of investments that we would want to do in the larger cap space. where the valuation is reasonable. So that's our attempt right now.
Okay, all right, Sanjay, appreciate you joining in. Thanks a lot for giving us all those insights, and we look forward to having a chat with you. I think a couple of comments you made were reassuring, that people are asking how much more money to allocate, when to allocate, and there's no big panic. That's the broad takeaway that we got from that conversation. Thanks a lot. Well, the markets are down 100 points, but we're doing better off than what it was looking like, say, an hour or so ago. Nimesh joins us to tell us what's going on. Well, Nimesh, a lot of panic. I mean, today was that sort of a day, right? In terms of it was shaking out all the weak hands. But what are you picking up? How are the flows?
Well, actually, flows, forget the flows part, but more so, while you're seeing a small recovery, I think this week was very brutal, right? I mean, no taking away the fact the indices is around 7 to 10%, which means the portfolio are down 25-30%. And now you can see the panic with the portfolio investors. I've been talking to so many investors in the last couple of days, and they clearly feel like, now it's hurting them. There is a lack of confidence now. People are panicking. And, until now, in the last few years, every follower is like, what to buy? Yeah. Now the question is,
what to sell?
When can I get an exit? How can I get an exit? So that's the kind of sentiment which has changed. And that's playing up in the broader market names. I guess today being a Friday factor also, that's added to the pressure in the broader market names. Yes. I understand technically a lot of investors were not allowed to buy as well, despite having margin. So this margin pressure is there. I mean, let's not take away that there is no margin pressure. There is margin pressure, and that's impacting the buying of other investors as well. So that too played out in the broader market names today. Institutional flows are still mixed. I've been saying this but for the last couple of days, if you look at the data, it's dollar to dollar matching between FIs and DIs. Looks like that kind of day today as well. But the panic is in the broader market names, and look at the advance decline ratio as well. Almost 1:6, 1:7 on the sell side. So that shows that there is clear capitulation in the broader market stocks today. Consumer as a space has been well bid today, so that's where some bit of buying is seen from the large institutions. But again, the good part about today's recovery is 28,800 on the Nifty and PCR at 0.7. That's been what is helping a bit of recovery even in today's market. But clearly there is panic now from portfolio investors.
Well, that's right. That is the combination, right? Nimesh, 0.65 on the PCR.
And
you have the FIs that are net short, and the double or triple bottom at 22,750 to 22,800, at least for now. If it breaks, it will be on your bottom.
But honestly, while we're laughing and we are talking about these levels, you ask for the sentiment across street, it's very, very bad. Yeah. People have just lost confidence.
Indeed.
There is no sentiment to buy or even discuss buying ideas. Forget buying. They are not even discussing
sentiment
ideas.
is down.
To buy.
Absolutely.
Very, very bad.
Absolutely. What about individual stocks? What are you picking up?
So in terms of individual names, it's not everything is bad or there is massive selling across the board. So the first name is Affle India. While the stock is off days high, actually intraday the stock was up 3% as well, and there was buying as well from large institutions. So that's first name which stood out on the buy side in a weak market. The second is couple of names which is where there is aggressive delivery-based selling. IRB Infra as well as Delivery. Delivery is now part of FNO as well. Both the stocks are very aggressive selling from large institutions. So again, a bit of higher delivery on the sell side. The third name is Manappuram Finance. While the stock is in the FNO ban, the results were quite weak. But I understand there are block bids from larger institutions in Manappuram Finance, and also there is a hope of a potential deal there. So that's the reason why some bit of traction in Manappuram at lower levels. And the last is a couple of stocks in the cash market where there is buying interest. SpiceJet and Dr. Agarwal, a recent listing. Again, this stood out for me because kind of panic we are seeing in the broader market. To see an institutional flow in stocks like SpiceJet and Dr. Agarwal stands out, and that shows that at lower levels, some bit of nibbling is happening from domestic mutual funds and institutions. I wouldn't say this is all retail money, but from an institutional point of view, some bit of buying or nibbling is happening in broader market names and small cap stocks as well.
All right, Nimesh, thank you very much for that. So keep an eye out on those names, as Nimesh points out. We'll take a quick commercial break here. Just a quick look at the index, which is still down about 100 odd points or so, but it's not worsening, even if it is not picking up more. More on the other side in terms of market conversations. Stay tuned. Coming up.
100 points down, but at least the Nifty has managed to move back above 29,000, 22,900, 29,000. Maybe a slip of the tongue, maybe, I don't know, is it a Freudian slip? I'm not too sure, but yeah, 29,000 seems a very, very distant move at this point in time. Mitesh is back with us. Mitesh, it's been a tough week. What's the final advice you leave us with and any final trades?
So, I think, the only notable event which has happened today is that 22,800, 780 zone was tested and has held on. We still don't have a sign of a proper reversal as yet. So I'm not saying that, we'll see a positive week. But what is important that level marks, that level is marked as an important level. And fresh shorting should either happen closer to about 23,150, 200 zones or below 22,750. Till then, I think trade will stop with prices. I have a BTST on Reliance, given the fact that Reliance is also bouncing back from the previous lows of 1205, 1206. So BTST here with a stop below 1209 for targets of 1230. And SBI charge is something, which I'm very comfortable recommending, because if the market is weak, the stock will most likely hold on, looking at the strength it is showing and the setup on the charts. And if the market is mildly in a pullback mode, I think this will be one of the first stocks to make a fresh swing high. So SBI charge is the BTST with a stop at 848 for targets of 880.
All right. Mitesh, thank you very much for that. Let's just quickly get you that other big debate we had in the morning as well. This is, of course, the question about when the FII selling will start to taper off and maybe end at some point. Remember, the FIs have been sellers of some $21+ billion since October of last year. So this is Samir Arora and Gautam Trivedi in the morning in a discussion with us on different sides of the equation on this one. Listen in.
If you look at what President Trump seems to be outlining for the foreseeable few years, lower taxes, lower inflation, and bringing investment and jobs back into America, if you're an asset allocator sitting in California, New York, Michigan, Ohio, etc., why would you want to put money in emerging markets? If you look at it from July of 2024, Asia, ex-Japan and ex-China, we've seen a total of $56 billion of net outflows by foreign portfolio investors. So India is not unique in that sense. But if you are an EM fund manager who's got hit with redemptions, which a lot of them have, you'll sell the most expensive market first. And as a result, I think that's where we're getting hit the most.
You don't think enough has been, markets always, they're never neutral, right? They're excess on that side and this side. So there was excess on that side. Maybe you're getting to a little bit this side now?
I don't think so
Not
yet.
yet.
As much as I'd like to believe so, but I don't think so yet, only because foreigners have sold a mere 2% of their mark-to-market trillion-dollar holding, which was as of the 26th of September. So can they sell another 2%? Yes, they can. Do we have the ability to absorb all of that selling? I don't think so. If you look at the selling that started on the 26th of September of last year by foreign institutional investors, we've seen about 2 lakh crores of net outflows, more than matched by domestic institutional investors buying as much as in mutual funds and insurance companies buying as much as 3 lakh crores. However, the Nifty 50 is down 12.5% since. Year to date, the numbers are almost matching each other. FI flows matching with a domestic. Yes. So that tells you there's a third element at work, which is HNIs, family offices, AIFs that don't get clubbed with the DII buying and selling. And of course, retail, which is direct into the market, not coming through mutual funds. So that third element has really been determining the flow of the market. So we're still very much a flow-driven market versus fundamentals.
Before this, I was hearing Gautam's extremely bearish conversation.
Gautam is miking off. I'm asking him to
mic
back on.
Totally wrong.
Why? Tell us why.
First of all, you can't say that FIIs, because they have sold since September, have gone away, because in September they put $6 billion. So therefore, you can say from October 1 they did. So what did they discover? They discovered that the US Trump is coming back, and therefore US will be a better place to invest. But you can do this for 1 year. You will keep saying this argument, because by this time between US and India, the difference may be already 25%, number one. Number two, in a global portfolio, maybe 60% or 65% is US. and 1% or less is India. And similarly, China is 1%. So somebody met in a board meeting and said that we should make our 65% into 65.02%. And we will take that 2% out of India, out of the Indian 1%, you sold 2%. The point is that trade is played out and it is over in some sense, not literally, because even today or yesterday, selling. But picture, this trade cannot go on forever in itself. Secondly, the pension funds and the endowments and all those, if they say that today US is better, therefore today I will increase by selling India, I think we always had this view that at least some investors in this world, not us, not everybody, are long-term investors. And there are equal number of people who say, or not equal maybe, but quite a few people who say we are buying a market that has not performed well or whatever. But the main point is that there is 65% or whatever, some big number like that in US, and there is 2% in India, China, and there's 33% in the rest of the world. So why we should compare ourselves with the US only, compare ourselves with the rest of the world, whether they should be sold or not. The point is, if you look at flows, even December, it was positive number. So it is not going to be that every day for now, forever, it will be selling.
Welcome back. We've been discussing so much of red. I thought I'll pull up one green stock at least as we are winding down for the day and the week. Look at Godfrey Phillips. It's singing its own song. It's in its own world. 20% circuit on Godfrey Phillips on a day like today. Numbers came out and numbers are good. The margin has actually expanded about 400 basis points, but still, I mean, this kind of a performance. And there's also the courtroom battle that's still very much alive in terms of ownership, etc. But the stock has done really well today, almost 1,000-point move, 6,000 on Godfrey. Anyway, on that note, let's welcome in our next guest on the show. Hemang Jani is joining in. Hemang, I don't know if you have any interest in Godfrey or not, but we're really trying to find some positives in what has been such a difficult week. Your thoughts, Godfrey, in case you've seen the numbers? And if not Godfrey, is there anything else you've bought in the market this week?
Yeah, so good afternoon. Godfrey Phillips, I'm not looked at it, but I do think that while we are going through this panic in the broader market and people are moving safety and large caps and so on and so forth, but the fact is that eventually the market will move into the names where there is a earnings growth, no matter the valuations being on a higher side. So some of the names that I came across during this quarter, I think Polycab delivered good set of numbers. EPS this quarter would be 45, full year EPS would be 128, 7,000 crore kind of a capex, purely from internal accrual. So looks like a good bet. PG Electroplast, I think, stood out for us, both in terms of quarterly numbers and guidance. So while this whole chaos and panic settles down, I strongly feel that the market will move into the names where there is a earnings growth and visibility. So surely those stocks which have corrected present a good opportunity.
Okay, by the way, there's some buying actually. It's not like all is lost. People are still active. Check out Chalet Hotels right now. Look at Keystone Realtors. Big spike in Keystone Realtors. 4.5% up on that stock. Ethos is now up almost 8%. So there are, pockets which are stirring to life. Big moves on some of these stocks. Sasken is surging 4.5% up. So interesting. Not entirely all gone. Hemang, unfortunately, I know today's one of those days we couldn't speak too much, but thank you very much for a couple of those ideas that you've shared. We're running into market close right now, so apologies for this short one, but we look forward to a longer conversation perhaps next week. Quickly, to start wrapping up, the day 0.5% gone on the Nifty. That is for today. And if I look at the overall weekly tally, the Nifty is going to be going home with a cut of almost 2.8%. For the Midcap index, that cut is about 7.6% for the week. For the small cap index, the cut is 9.5% for the week. Let's talk about the Nifty stocks then. The ones that led the fall today, Adani Ports, BEL, Adani Enterprises. Trent has lost a fair amount of ground again, 6% down on Trent for the week, down about 4% today as well. Bajaj Auto, Hero MotoCorp, a lot of the auto stocks are under pressure as well. Perhaps some uncertainty around the tariff issue with the US. On the upside, ICICI Bank, Britannia, Nestle, and some tech names like Infosys and TCS. But the biggest story obviously was the mid-caps. Lots of losers, no doubting that. Loris, Deepak Nitrite, Natco Pharma down another 9.5%. These were some of the really, really weak hands and the weak names. But like I was saying, the last couple of minutes were actually a little promising. Has the worst of the mid-cap capitulation played out? Well, like we just mentioned, some of these stocks like Ethos, Borosil, and of course Chalet Hotels we've been pointing out, they have managed to see a fair bit of green as well. So let's say it's been a really tough week for the markets, and the bulls will hope that 22,800 has held once again as a firm support because the market has managed to bounce from those levels once again. Fourth time running, actually, the market's bounced from the zone of 22,800. With that, it's curtains on this edition of Closing Bell. Thank you very much for being with us, but all the market commentary and conversation continues. Up next is Editor's Roundtable.
Yeah. Monday, call me up. मेरे को
Yeah, I can.
In office?
Sorry?
Jignesh Gopani, Axis.
Jinesh
Haan ji.
Gopani, Axis wala.
Yeah. But he started his own fund now.
Started his own fund, yeah.
I need water.
Yeah, one small data point I'll put out. What happens after when Nifty loses 8 straight times?
Nice one.
Nice. What happens if we go back up?
No, I mean the
This time it's 19% for Midcap.
अरे छोड़ बाद में यार.
19% is what the highest we've seen in the last 5 years.
Okay.
And then we've seen a bit of a... even in small cap, now we are down 20%.
Yeah, I can hear you.
Between 20 and 27%.
The Sensex and Nifty declined for the